Thank you very much. As you know, what we're presenting here today is research-based, and it has given me a special pleasure to note through the 4 years of this project how several PhD students have latched onto the project and written their PhD studies in such a way as to be a real contribution to the project. One of them is David Monciardini, who has even included sustainable companies in the name of his PhD thesis. Please go ahead.
Okay. Thank you very much, Beate, for the introduction, and for you for the conference, for organizing this fantastic conference. Last year I was in a very strange position because after almost 3 years researching on non-financial disclosure, I end up working for 5 months at the European Commission, basically drafting the legal proposal for the new directive on non-financial reporting and doing the impact assessment. During this period, I realized how different it is to be actually writing a policy and dealing with all the compromise and all the things that people tell you you cannot come out with because this is not going to go through. In this occasion, I want to say also something about this new directive and something about what I would have done if I could have write by myself this proposal. Few words about the new proposal. Basically, the good thing is that it's going to multiply by 7 the number of companies disclosing in Europe. So they expect to have 18,000 companies in Europe disclosing. The other good thing is that basically it becomes mandatory for the first time. The current fourth accounting directive already include environmental and employee information. And the good news is that now we're going to have also corruption, information about corruption and about human rights. Obviously, a great news is also that it's going to be in the annual report. And so this is all very good points. But at the same time, there are some flaws in this proposal. I don't think it meets completely the objectives that it says it's going to meet, because the objective were to increase the relevance, consistency, and comparability of non-financial information currently disclosed. And since this information will be, from a quantitative point of view, increased, but not from a qualitative point of view, that's actually not true. And the risk is to have a boilerplate disclosure. The second point, and this is the most important for me, is that it doesn't really commit to the 2011 CSR communication, which asks companies to include in their business operation and strategies sustainability, human rights, anti-corruption. In fact, you have in the new proposal this non-financial reporting separated from corporate governance and financial reports. So that goes against the tide towards integrating reports. And this is really a big issue. And then the second big point is that basically it doesn't even understand what accounting is about, because many of the underlying thinking that is in this proposal is based on the idea that markets are in a perfect equilibrium. So you just have to provide information and markets will just digest it and work with it. But actually this is not how markets work. The market is socially and historically constructed. So when you actually build a new system of accounting, you build really the framework through which markets work. So you should have a much more reflexive approach towards the regulation of non-financial reporting. So in the last few minutes, I want to say two concrete proposals that I would suggest. The first one is, at the moment you have two articles, Article 46 and Article 46A, and they are separate. One is dealing with non-financial reporting, the other one is dealing with financial, and the other one is dealing with corporate governance. So now you're going to have in the future one statement for non-financial and one statement separated for corporate governance, which is actually meaningless. The point is to merge them and have one Article 46, and that would be easy to do, in which you have something I propose new, which would be ask companies to comply with environmental, social, and governance code that would be created at the national level. Because at the moment is a report or comply system. In this way, it would become a comply or explain system. So, because at the moment you don't have a framework to comply with. So in this case, you would have national codes that integrate corporate governance and sustainability. And in this case, you could comply with a framework that is nationally based and which works fairly well with corporate governance at the moment. One example is Germany, in which there is already a sustainability code, which is very well done, and I think it's a good start. And but it's a voluntary code. But it could be an example of how to do that. The second point is that in the new directive, basically investors are always treated as not as issuers of reporting information, but just as the main audience. And this is a bit the result of the shareholder primacy that we've been talking about principle. At the same time, I think that it would be very interesting to see also a new regulation that asks investors, especially institutional investors, pension funds, and asset managers, to report or explain about their policies about sustainability investments. In this way, you would have a domino effect. You would have more requests for information by the big institutional investors, and the quality of information would automatically increase. So those are the two proposals that I would like to do. Thank you very much.